Hey there traders, Lance Beggs here from YourTradingCoach.com. Let's continue our series on price bar reversals by discussing the key reversal pattern. Once again, this pattern is applicable at market tops and at market bottoms. Let's start by discussing a top reversal pattern. The setup for the pattern is an uptrend. Remember though, the trend can vary on different time frames, so we may be in a longer term uptrend or we may be in a short term uptrend rally within a longer term downtrend. Don't get confused by terminology. Price is simply trending upwards towards the pattern as displayed here. And if price is trended up into an area of potential resistance, then it's even better. The key reversal forms as an outside bar. This means that it has a high that is above the previous high and a low that is below the previous low. In other words, the range of the key reversal from its low to its high is completely outside or engulfs the range of the previous bar from its low to its high. Now, there are two other requirements that make this outside bar a key reversal pattern. The price must open above the previous close, and the key reversal must close below the previous low. It's an incredibly powerful pattern. Confirmation, as with all of these price bar reversals, is price trading below the low of the pattern down at this point here. The stop loss would ideally go above the high of the pattern at this point here. Now, being an outside bar though, this could be quite a distance away. If that's the case, it's wise to consider a reduction in position size in order to keep the position risk within your limits as defined in your trading plan. Or look to a smaller time frame to find an area of resistance within the key reversal at some point in here, and placing the stop loss above that area, or just pass on the trade. There's always a better setup coming. Let's consider the psychology or sentiment of the pattern. It's an incredibly bearish pattern, but why is that? Certainly everything is looking bullish as price rallies within the uptrend up here. Bullish sentiment appears to be continuing as price then opens at a higher point and then proceeds to break above the previous bar's high into new territory. However, at this point, for whatever reason, supply is now able to overcome demand. Perhaps it's a previous area of resistance, so the bulls are taking the opportunity to lighten their position or even take full profits. And we can combine that extra selling pressure with the bears, who determine from their analysis that resistance is likely to hold and enter a short position. Whatever the reason, supply or extra selling pressure is now overcoming demand or buying pressure, and price falls. Not just back to where it opened, not just back partially into the previous bar, but all the way to close to its low and below the low of the previous price bar. The low on this previous price bar was the lowest price that the bears were able to achieve during that time period. This time though, on the key reversal, they've not only exceeded that low, but they've done so from a higher position, which is incredibly bearish. The bullish sentiment on the uptrend has suffered a massive blow from the bears. Increased supply has driven price sharply lower, showing a clear change of bearish to bearish sentiment, at least on this short time frame. Will that change to bearish sentiment continue over a longer time period, or will it fail, inviting bulls back into the market at these lower prices in sufficient quantity to overcome the supply? Only time will tell. However, confirmation of the pattern through price breaking below the low of the key reversal shows a real possibility of further bearish sentiment and lower prices. Anyone long will seriously consider further reduction or closing of their position, adding to selling pressure, and other bears will be attracted to the market, again adding to selling pressure and helping to propel the price lower from this point here. Looking now at a downtrend reversal, you'll find the concept is exactly the same, just reversed. Price trends down towards an outside bar, but not just any outside bar, rather it's one showing a clear reversal of short-term sentiment, with price opening below its previous close and closing much higher above the previous high. Ideally, we'd like to see this occurring at an area of price support. Confirmation is through price trading above the pattern. As usual, if you're a bit more conservative, you may wait for price closing above the pattern. Adjust everything as you see fit to meet your own tolerance of risk. Be aware though, the more confirmation you seek, the closer you are to the end of the move. and the pattern displays a clear change of sentiment from bearish during the downtrend to bullish, at least within the key reversal price bar. Within the key reversal itself, bearish sentiment and selling pressure from here appears to be continuing as price opened lower and then broke down below the lows. However, bearish sentiment was then overcome by an increase in demand or buying pressure, which was able to drive prices high enough to not only exceed the previous high, but to close above that high as well. A clear victory for the bulls over the bears. Confirmation through price trading higher above this point here will potentially lead to even greater bullish order flow as anyone short during the downtrend lightens their position or even closes it entirely, which is done through buy orders, in addition to it being a commonplace for bullish traders to position their buy orders. Pretty simple stuff, but very powerful. Let's have a look at a couple of examples. This is Apple on a daily chart. Nice uptrend here. Actually, lots of potential reversal signals here. We have a pivot point reversal here, which we haven't talked about that one yet, but this pattern is unconfirmed. We have a closing price reversal at this point, once again unconfirmed. An almost key reversal. It's actually an outside bar, but it didn't open above the previous close, and it didn't close below the previous low. In any case, it appears bearish, but once again unconfirmed, as price action did not trade below the low of the pattern. And finally, right at the top, just above the arrow here, a key reversal. Outside bar with an open above the previous close and a close below the previous low. Confirmation through price trading below the key reversal signals an end of the uptrend and a commencement of a choppy sideways, then with a downward bias, change of trend. Alrighty then, Commonwealth Bank of Australia. Nice downtrend into a key reversal, an outside bar with an open below the previous close and a close above the previous high. Price then enters a counter trend rally. Note here that the counter trend rally at this point is halted by another reversal pattern. We have a hook reversal initially, but it's not confirmed. Then we follow that up at this point here with another key reversal, an outside bar with an open above the previous close and a close below the previous low. This is a good reminder that top reversal doesn't necessarily have to be within a larger time frame uptrend. The uptrending price moving into a key reversal can simply be a counter trend rally within a longer term downtrend. Okay, so coming up in the next video, we're going to look at the island reversal, and then we'll follow that up with the final video in the series when we discuss the pivot point reversal. I'm Lance Beggs from www.yourtradingcoach.com, wishing you, as always, many profitable key reversal patterns.